Nadia is a trader. Her financial year end on 31st March. She extracted a trial balance at 31st March 2020. The debit and credit total did not agree. The difference was entered in the suspend account. After Nadia prepared the draft financial statement, she discovered the following error. The purchases account. Okay, so let's see what are the questions they asked. So they asked to prepare and include the original differences on the trial balance as a balancing figure. I mean, they want us to find the opening balance for the suspend account. So we prepare the 6th column. Suspend account. Date, detail, detail and dollar sign. Okay, opening balance, we don't know. We leave it first. 2020, March 31st. We don't know which side is small, so just leave it. Okay. The purchases account was overcast by 110. So purchases overcast means overstated. Overstated, debit over. Then we have to reverse in the credit side. We have to credit purchases, debit suspend account. So purchases 112. 13 for discount allowed in February 2020 has been credited to the discount allowed account as $15. Suppose discount allowed should be debited, but we go and credited. So the amount that we are making wrong, we have to put it back. We have to debit this correct amount, debit 13, and then reverse here, debit 15. So total 2 times of the debit, 2 times of the debit in the discount allowed, total become 28. So one side error in the discount allowed, then we have to use suspend account. So we credit suspend account for the discount allowed, because we debit discount allowed 2 times. So amount 13 plus 15. 13 is to put back the amount, 15 is to reverse the error. Number 3, a payment for insurance 220 was correctly recorded in the cash book, but was recorded as 202 in the insurance account. Insurance account understate, so we have to debit insurance and credit suspend because cash flow is correct. So the amount differences that we should record, 220 minus 202. Next is that commission received 65 has been debited to the account for commission payable. The entry in the cash flow has been correctly made. Commission received should be in the credit side, but we omitted. So we have to credit commission received and debit suspend. So here will be commission received. We want to put back the correct amount. This is to put back the correct amount, 65. Whereas debited to the account commission payable. So this is wrong account. We have to credit commission payable. When we credit commission payable, okay, we have to put back in the debit side here, which is commission payable. So one is a payable, one is a receipt. So amount 65. So this one is to, so put in the comment, to put back correct amount. Okay, this one is to reverse wrong account. Okay, so that is a double entry that we made. Now, question 5, information 5, cash drawing 85 was correctly entered in the cash book, but credited to the drawing. Drawing should be debited. but we go and credited. So now we have to double up the amount. Debit drawing and credit suspend. So credit suspend amount, but this amount must be double up. 85 times 2, because one is to reverse, one is to put back the amount. Next is that the cost of vehicle 190 has been debited to motor vehicle. So 7, the error for the 7 actually is an error of principle, because expenses classified as a motor vehicle non-current asset. A payment of 100 to Robert has been posted to the Robita. So this is a error of commission. So this one is also no need go through the suspend. So no other entry. So we take this amount, put into here, suspend account. We check which side is more, which side is less. Okay. So now debit more than the credit. In this case, our balance, the opening differences will be in the credit side, which is 24. Here we can put differences on trial balance differences, or we put balance. This is from the trial balance that we take. Okay, now next move on. Identify the error made on the 6 and 7. So 6 and 7, this is a 6. This is a 7. Okay, so these two error that we put. Okay, so error of principle, error of commission. So error of principle is that wrong class account but correct site and correct amount. Okay, whereas this one is same class of account but wrong account. One is the same class of account, one is a wrong class, wrong account. So see the differences. This is the same class. Okay. Next is that they asked complete the following statement to show the effect on the profit for the year of correcting error 2 to 7. If there is no effect on the profit, write near in the no effect column. Follow the instruction. Make sure you read the question properly. They say that write near in the no effect column. So follow the instruction. And then calculate the profit for the year, ignore the depreciation. So let's see. We go to take in the adjustment one by one. Okay, let me copy the format first. Nadia, statement of corrected profit for the year ended 31st March 2020. Okay, and then here is a drafted profit for the year before correction. Okay, and then here no effect. This one increase in profit, decrease in profit. Okay, this is the amount 6720, and then here the given amount 110, error 1, error 2, error 3, error 4, 6, error 7. Okay, next is that corrected profit for the year. Okay. Okay, let's recopy the format. Okay, move to the here, easier for us to do. Okay. Now, side by side, we see the purchases account was overcasted. Overcast means we had to credit purchases, debit suspend account. When you credit purchases, it will increase the profit. Okay, credit purchases, purchases decrease. Okay, purchases decrease, cost of sales decrease, then profit will increase. So this one 110 increase. 13 for the discount allowed has been credited to the discount allowed account as 15. So we debit discount allowed 13 and reverse 15. Total debit is 28. So when we debit discount allowed, expenses increase. So expenses increase, profit will be decreased. So the number 2 impact will be decrease. So decrease by 2 times because we reverse, one we put it back the correct amount. So this one will cause the error number 2, cause the impact decrease. Okay. Number 3. A payment for insurance was recorded, but was recorded as 202. Insurance is understated. Okay. Insurance understated, therefore it will be expenses. When we debit insurance, so expenses increase. So expenses increase, profit will be decrease. So this is the impact for it. So in here, -220 minus 202. Okay, 18. Now, commission received 65 has been debited to the account for commission payable. The entry to the cash book has been correctly made. So commission received is an income account. Income increase, and this will increase the profit. But another one is the expenses. When we credit the commission payable, it will decrease. Expenses decrease, profit also will increase. So this one will increase 2 times. So the profit will increase 2 times. So take 65 times 2. Okay, 130. Next is that number 5, cash drawing. Okay, this one, the double entry to adjust it is debit. Okay, debit drawing 2 times, which is 170. Okay, and then we credit suspend. So this account did not involve the income statement account because drawing is a capital section. So in this case, for the error 5, is a no impact we have to write near. Okay, follow the instruction. Now, number 6, the cost of vehicle repair, 190, has been debited. This is a double entry that we're going to adjust it. We debit, okay, debit vehicle repair, which is expenses account, credit motor vehicle, which is non-current asset account. So debit expenses, because this is a expenses, so expenses, when we debit, it will increase. Okay, it will increase the expenses. Expenses increase, profit will be decreased. So this one will decrease by how much? 190. So this is information. Next is that a payment. This one we adjust through the same class debit. Okay, pay to Robert. So Robert received, and then credit Robita, because Robita is wrong. We pay, so it's a debit. So this one also no impact, because these are two are the trade payable. So this is also no effect. So now we add the subtotal. Okay, debit the subtotal. So see which one is more, which one is less. So if this minus this increase is more than the decrease, so therefore our amount should be increased. Okay, let's see. Okay, let me add up, see whether the effect is correct. So here total, okay, 240. Increase, decrease. So the differences net is a $4 only. Okay, increase, that means we have to plus. Okay, if a decrease, we minus. So this is adjusted profit for the question. So now let's move on to the next. Okay, so this is an answer for C. Let's move on to the next. Okay, the next is at 31st March 2020, Nadia trade receivable owed 14,500. After preparing the draft financial for the year ended, Nadia discovered below 300 owed by DD Supply should have been written off as a irrecoverable. A provision for doubtful debt of 2% of should be created. So created means that the first time. So they asked to prepare the journal for the adjustment. Journal, date, detail, debit, credit. Okay, the first is the number 1 error. Okay, so what is the date? The date is happened is March 2000. Okay, 2020, March 31st. So the first error that we have to write off the irrecoverable debt. Debit irrecoverable debt 300 and credit 300. And who we're going to credit? DD Supply, because we know the customer name, we put the customer name. If we don't know, then cannot put. The next one, a provision for doubtful debt 2%. So before the adjustment, the total amount is 14500. But because here got the irrecoverable debt, how are we going to calculate the provision? Because when you have the creation, provision created, that means this is first time. The first time the double entry must be debit income statement. This is the first time recording. Debit income statement, credit provision for doubtful debt. So there is a double entry we should have. This is first time recording. Must, this is a must. So how are we going to calculate this 2%? So I put into here. To calculate the provision, we take 14,500 minus 300 and then times how many percent? 2%. So this is a formula that we should have. Because additional irrecoverable debt had to deduct from the trade receivable before calculate the provision. So 14,500 minus 300 and then times 2%. So we get 284. So this is a journal for it. So that is for the question number 4.